when John Bollinger invented them, traders have adopted Bollinger Bands and used them in many different ways. Remember, they measure volatility. Let's look at some of their uses now.
Okay, so what is Bollinger Band Deviation pinching then?
Let's get our chart back. So, if the price action trades in a narrow range, the Bollinger Bands squeeze or pinch closer together. You can see this happening here. The price isn't moving much relative to its previous behavior. The bands are pinching together.
Hence the name, I guess.
Exactly. Traders can use this to alert themselves to a potential explosive price movement where the volatility returns to historic norms. This can indicate the buildup of the energy before some kind of breakout occurs. Usually, if the price action breaks below the lower band, it continues to carry on down because of the loss of support.
Okay, and what if the price action breaks above the upper band? What happens then?
Well, if the price action breaks out above the upper band, the price action continues to move higher because of the breakout above the current resistance level. Traders should be alert when the price crosses any of the Bollinger Bands, the upper, middle or lower.
What would that mean?
Well, when the prices cross the middle band, it could be a change of trend. We know that because it's a moving average. When prices move outside the upper or lower bands, it implies either strength or weakness in the price.
Yes, I think you mentioned that earlier. Do traders assume this will correct and therefore buy when the price is weak and sell when it's strong?
Some do, but that's too simplistic. The issue comes during a trend. By definition, the price should be strong, so it might keep touching or going over the band. We can see this happening a couple of times in the recent S&P 500 trend. Bollinger called these tags as opposed to signals because they shouldn't be used in isolation as trade signals.
That's good to know. I'll keep that in mind.
The tag to watch out for is when in a bullish trend the price drops below the lower band, suggesting weakness. This would alert traders to start paying attention to the security and review other reversal indicators.
You mean areas like the ones here?
Yes, because the long-term trend is bullish. Those lower band tags are more significant than the ones on the upper band, where we would expect strength. Do you remember earlier that I mentioned Bollinger Bands were used to identify support and resistance levels?
I do.
Good. Well, like moving averages, because Bollinger Bands are so widely used, they can act as support and resistance levels. In a trend, the price oscillates between the middle simple moving average line and the bands.
Okay, so how does it work then?
Well, these levels have more significance in longer time frames and also in clearly defined trends. In clearly defined uptrends, the middle band, which is a 20-period SMA, can act as the first support level, and the upper deviation band would indicate a possible resistance area.
Okay, I think I'm following. So what would happen in a downward trend then?
In clearly defined downtrends, the SMA would act as a potential resistance level and the lower band a possible support area.
I'm with you. Thanks for explaining.
Yes, that makes sense. Thanks.
Just as Bollinger Bands have their benefits, they have a few limitations too. The first being the period that they look back over.
What do you mean?
Well, when something significant changes in the underlying volatility in a market, it takes a while for the old volatility to filter its way out of the calculation.
Ah, I see. So changes in the prices will take time to filter through.
That's exactly right. If you've got a 20-period SMA, then it takes 20 periods for the new reality to fully filter in.
Yeah, I can see the limitation there.
Another limitation is, unlike SAR, Bollinger Bands aren't binary, so interpretation of them is subjective.
Yes, I can see how that would be a problem. Two traders could see the same indicator but conclude different things from it.
Yes, that's quite possible. Bollinger Bands are very useful. They are one of only a handful of indicators that measure volatility, which is extremely important in trading. They are best used with a combination of other indicators to manage the limitations.
So, as traders, we shouldn't use Bollinger Bands as standalone indicators.
Well, I wouldn't recommend it. Bollinger Band reading becomes more significant if it is supported by additional confirmations of the same reading by other momentum and trend indicators, support and resistance analysis, and price or candlestick patterns.
Got it. Thanks for explaining these.